Welcome back to another episode of With Sonar. Here we are. It's the back half of October. We're in Q4. Peak season is coming. We got a lot to talk about today. Also, have a very special guest today. We've got Hunter Carroll joining us as well, current FreightWaves employee, also a former FreightWaves employee at the same time. We'll talk about that in a minute. Hunter, great to have you here. Before we jump in, I want to kind of just set the stage a little bit. There's been just since we planned this show out this morning. So we were going to talk about JB Hunt's earnings, but less about JB Hunt and more so just how, why their results are very unsurprising and how we can expect and predict this type of behavior going forward. The other thing is we were going to look at peak season and where that's really likely to go. And then thirdly, we just found out it looks like, unconfirmed, but it looks like Convoy is shutting down. We got an official confirmed statement from Convoy not long ago saying all shipments have been canceled and their load board is empty.
Yeah, Luke.
Welcome to With Sonar, Hunter.
Yeah, thanks for having me. Excited to be here.
Yeah, so we're going to hit up all that today. Hunter, give the folks a 30-second background.
Yeah, sure. So as you mentioned, came from FreightWaves with a finance background, did some research here for a couple years, then went to the brokerage world, and then found myself back here about 8 months ago, helping me and you kind of starting something new here.
That's it. We are starting something new. Trying to apply the FreightWaves data, the logistics data, if you will, right? The transportation world, the freight world, to the financial services industry. It's a great leading indicator for the economy. So trying to uncover additional applications of the data.
Yep, for sure.
I'm excited about it. So who are we talking to right now mostly?
So primarily hedge funds, so financial institutions, big banks, venture capital, private equity to a degree, but mainly focusing on the hedge fund world, whether it be a macro fund, long, short, whatever the case may be. That's our primary audience.
Yeah. So speaking of the hedge fund world, right, we got to talk about JB Hunt, one of the biggest players in the logistics world, particularly here in trucking and intermodal in the U.S., but definitely in the world. And they just reported earnings. We're in earnings season right now. Big heavyweight. They've got about $18 billion valuation for the company, give or take. Their stock's down, right? They reported earnings. They missed expectations. Stock dropped. As of a moment ago, it was almost 6.5%. And it is 6.4%. So stock's down 6.4%. Decent amount in a day for a company worth almost $20 billion. And they missed revenue. They missed top and bottom line. And did anything strike out to you in their earnings report?
Well, I think we'll talk about it here in a second. But sure, revenue was down, missed expectations, but we'll see that in our data that's not that unexpected. I think one thing that's interesting to talk about real quick beforehand is the stocks moved more than the market thought. If you look at the options market, it was not pricing in a 6% move after earnings. So I think that's one thing interesting. I think the market had it wrong to a degree going into this earnings release.
Yeah, I think the market knew that it was going to be soft.
Yep. That
things were declining, but I think the acceleration of the decline is really, because markets are forward-looking, right? They're looking at what's coming, and the acceleration of the decline. Because if you remember, actually, JB Hunt at a conference I think last month announced that they were like, "Hey, it looks like the recession's not over, but the freight recession, we've already hit the bottom, and we're moving out of it."
Yep.
And to a degree, I kind of agreed with them because we were starting to see an increase in volume, but then things kind of started to move south again.
Right.
So, it's interesting to see. Let's go ahead and let's just pull up a little bit here. I'm just going to give a quick little breakdown of some of the JB Hunt numbers. So, basically, here's, they reported $3.16 billion in revenue on the quarter, which is a 17.6% year-over-year decline. Earnings per share of $1.80. And for the same period, it compares to $2.57 last year. So about a 30% drop there in earnings per share. So basically a 17.5% decline on top line and about a 30% decline on bottom line. Now, here's what's interesting is their revenue minus fuel surcharges declined right at 15% year over year. That number is very significant because we've seen something very similar in our data.
Right.
Basically our contract rate data. Can we pull up our contract rate data? I think I told you guys to pull up the volume data first, but can I switch that? Pull a little audible here real quick. There it is. Look at this. So pull that chart up. Boom. So from quarter of 22 to the same quarter of 2023, 15.1% decline in our contract rate data, which excludes fuel. So a tenth of what their markets decline. So I think, Hunter, from our perspective, no surprise, right?
No surprise, no. I think that is telling, though. I know on my end, if I was wanting to trade JB Hunt or have a better estimate of what they were doing, how their performance was, this would be telling. I mean, you can look, it's almost to a T, their revenue numbers almost perfectly correlated to our rate data.
And I think it's a testament, right? Because this isn't the JB Hunt index. This is just our freight index. And this isn't the only one. There's other indexes of ours that we have that are almost identical. Like our intermodal data is almost to a T to their top line. Our NTI index is very similar to their fuel included revenue numbers. So it's like there's multiple signals. So I think what it's really a testament to is trucking companies, just whatever the market does, that's what they do.
Yeah, it's hard to get around that. I mean, that's their one job is to move stuff. And they're exposed to the market. It doesn't matter how big, how small. I mean, they're still exposed to the market to some degree. They aren't going to be able to
some degree, to like all of the
to all the
degree.
degree.
It almost it feels like, right? The reason why I bring that up is like it doesn't feel like the big guys are really insulated by it. Maybe the freight recession hits them a little bit later, but like for the most part, they really aren't insulated by it. I guess I compare it to like retail. If you compare Target and Walmart, Target has taken a pretty significant hit. Mm-hmm. Walmart, on the other hand, while taking a hit, not nearly as badly as Target. And I think one of the biggest reasons is they've got a much more of a grocery pool. And in times when inflation's high, more people are starting to shop. A record number of six-figure salaried individuals are shopping at Walmart now. A record number.
Wow.
And so I think it's kind of telling. So that's kind of what I mean is in this market where things are kind of hurting, the consumer's hurting, right? Not all retailers are created equal, but it feels like in the trucking world, nobody's really insulated.
Well, I think the thing is, too, that's pretty telling about this, and I know that FreightWaves, I believe Craig's talked about this many times, is trucking's unlike any other market in the sense of the biggest players in trucking are still such a small percentage of the overall transportation arena. So it's not like the biggest companies have a monopoly or they have 10 trucking companies control 80% of the market. I forgot the exact stat. It's like the top 10 trucking companies control what, like 10% of the market? I'm not exactly sure on that one. I don't know if you have the exact number, but it's a very small amount. So they don't have the same pricing power as other industries do, even the Johns.
Yeah, I mean the biggest trucking company in the United States only controls about 2.5-3% of the market. Yeah. That's just one of them. So yeah, it's around there. I mean there's very fragmented. Mm-hmm. But it is interesting to see how much this does correlate. So I think I think we'll see a similar trend in earnings. I think what this tells us, we're going to see a similar trend, right? When Knight Swift reports, right? Even when some of the LTL carriers report, when TIA reports, Landstar, TQL, I imagine we'll see very similar trends as they all tend to be very exposed to the market, and even intermodal isn't helping JB Hunt a lot right now.
Right.
It will, and they're going to bounce out of this. But yeah, it'll be interesting to see where it all unfolds. Let's go ahead and take a step back. I want to talk about peak season here real quick. Can we pull up truckload volumes for us? So peak season is something that I was actually starting to get the signs of like, okay, maybe we're starting to climb out of this thing. So blue line here is truckload volume year to date. Different colors here represent the different years over the same period. Take a look at that blue line. Pretty much since February, we hit our bottom and we've been climbing up, inching up a little by little, separating ourselves further from that purple line, which is the 2019 volumes. And then what happened after September? Blue line's taking a dip. So it kind of feels like this peak season that we felt here leading up into the beginning of Q4 just ended. I mean, you see volumes going down, right? I mean, that's demand.
Right.
I mean, Hunter, what does that mean for our world?
I mean, if demand's going down, there's not a recovery going on right now. We'll say that.
Yeah.
No recovery in sight.
I mean, I guess I'm just looking at this and it's kind of like, I mean, with rates still declining. Now, volumes are technically above 2019 levels, but with rates still declining, I mean, it tells a very simple story. There's just too much capacity for demand.
Right.
Too much capacity for demand. which I think is you have so many of these companies competing, and likely that's part of the problem, among other problems. You know, when somebody like a Convoy or a Yellow or all these companies, it's just we're starting to kind of, I think, feel this pressure. Demand isn't bouncing back as quickly as we wanted it to. As a result, everybody's getting squeezed, and it's a fight to the bottom for rates.
Right. And I think there was an article published just a couple of days by us. I was talking about the reason that it seems like capacity is exiting the market maybe slower than we would have thought is that rates were so high for such a period of time that smart companies held on to cash. So they are more cash strapped coming into this than they were maybe in previous freight recessions.
Mm-hmm. Yeah, I think there's probably some truth to that. It does help. I mean, it helps too that the markets were so abundant and plentiful during 2020, 2021, and even a lot of 2022. But yeah, I mean, but it is going to get dragged out. Also, folks who bought equipment back in 21 have much lower interest rates.
True.
So they can weather the storm a little bit, even though the value of that equipment has dropped. I mean, we've seen the price of used trucks drop by over 50%.
Yeah, I was going to say
well
60, 70%.
Yeah, it's flirting with 70%
cratered.
now. How about that? How about that in the finance world? I mean, imagine like somebody's, you make those, I mean, you write those loans. All of a sudden, the value of those, the equipment
starts getting a little scary.
Now 70% in about what, almost 2 years. It's like, alrighty. Yeah. I mean, how much does a car, if you drive a car off a lot, how much does that, I don't know the answer. Just give it your best guess. How much does that depreciate when you drive it off the lot? I'm going to look it up.
I say I'm not sure. I know it's quite a bit, but imagine you buy a brand new truck, then rates crash 6 months later, and now you're stuck. Like even the owner operators, I'm not even talking about the financiers.
Oh yeah.
You're sitting here with a truck that you paid, double for what you could sell it for, and now your rates are half of what you were getting paid when you first put in the order. It's a scary scenario. It's not where you want to be.
Not at all. Okay, so here's something, right? So I'm trying to find something on Class 8 trucks, and I can to see how much value they lose on average after you buy it. But for cars, they said up to 20%. So 20% is the high end in the first year. So we're losing, let's just call it 60% in a year.
It's not good.
Doesn't feel like we're in line with the historical average.
Yeah. I mean, we're coming off of a historically hot market.
True.
It's easy. It's easy to think. Emotions get the best of you. If you're sitting here hearing about your buddy making $500,000 a year, whatever, owning a trucking company, and you're like, well, you might be looking at him like, well, he didn't have that much industry knowledge beforehand, and he's doing it. Why can't I do it? And then you let your emotions overfuel your judgment, and you go buy these trucks, and next thing you know, the market flips because everyone else had the
volumes
idea.
just plummet.
Volumes plummet, and then
all fighting for the same freight.
Everybody's fighting on the spot boards. Everybody talks about that spot boards. It's not where you want to be, but people that get into the industry, they're going to be on the spot boards. They aren't going to be able to go get contractual freight in their first year. Most likely not.
No.
I've never really heard of that scenario. And then you're in a tough spot, but emotions are powerful. Especially when you see a lot of money getting thrown around for a couple years.
Oh yeah.
It's easy to go buy trucks thinking, man, it's going to work out.
You're used to making $50,000 a year. All of a sudden you hear about your buddy who just made $150,000 in a year, and it's like, please and thank you. Yeah, let me go give that a try, right?
Well, it's always different, right? It's different this time.
Yeah, it's always different.
It's not. It's a market. I had that unfortunate conversation with someone right before the market peaked, and it's like, hey, it's a market. It's a market. I get it in the stock market, but it's a market. It's like, no, this time's different. Well,
yeah.
Hope he's doing all right.
And what was the Black Monday, right? 1981, this time's different, right? Hey, 2000, this time's different. 2008, this time's different. 2020, this time's different. Actually, that time might have been.
That might have been a little tiny bit.
Tiny bit.
Global pandemic.
It's a tiny bit.
Maybe not the best analogy at the end.
All right, folks, that's all we have time for today. Thank you. No, oh man. But actually, I'll say it's different. Maybe the cause.
Right.
But the volatility wasn't different. There was a crash. The recovery was artificial with all the money being pumped in, but now we're starting to pay the price for that. So technically, you can make an argument that it's just market volatility. there's different causes, but I'm trying
Market
to
was pumped in
listen,
08.
let me try to dig myself out of this hole here, okay? All right. I'm trying here, okay? I'm just a guy trying to stay with it, all right? I'm going to have to go back to trading JB Hunt stock, which I can't do. But if I could, then that's a good index to use.
Yeah.
Maybe there wouldn't be surprises.
Yeah, you would know where to go get pretty good estimates on the revenue numbers.
Pretty good estimates on the revenue numbers. So, okay. So let's say that peak season, that blue line continues to decline. I don't know if it gets all the way down to the purple line, 2019. That had a pretty steep decline. But, I mean, even if it does, let's see. We've already declined about 3%, 4% this month. That's a lot. 3 to 4% of the nation's freight just gone in the last 3 months. Or, excuse me, in the last month. Or, excuse me, in the last 2 weeks. That's a lot. That's a big decline. It looks like, according to this chart, 2019 saw about almost a 10% decline between September and mid-November. We see another 10% decline in volume. My goodness. It's hard to see. It's hard to imagine rates going much lower, but they could.
They could, and they could. I think it's important to just piggyback off what you're saying too. Of like, it's easy for us to sit here and say, "Oh, it's just 2%," but the monetary value of 2% of the nation's freight, it's astronomical. It's huge. It's a tremendous amount.
So now, this is full truckload volume. But if we pretend that it's all truckload volume, let's just assume that the trend is stable for all truckload volume. There's around $800 billion spent on just moving the freight via truck in the U.S. That includes LTL, private fleets, public fleets. I understand, but this just represents for-hire trucking. But let's assume that it's 3% across the board. What's 3% of $800 billion? If that trend holds, right? That's what's that? Almost 24 billion, right?
24 billion, yeah.
That's a lot of money. That doesn't even include the actual goods, to your point, that value that's lost inside, that's not moving, that people aren't buying.
Right.
It's a lot of pizza.
It's a lot of money. A lot of pizza. It's
a lot of pizza.
Yeah.
Which, by the way, also, we need to talk about this. We will be having with Sonar, quick little PSA, but we're less than 3 weeks away from future supply chain. Less than 3 weeks away from future supply chain. This is going to be the second time that the event is here in our home city of Chattanooga, Tennessee. It's going to be fantastic. Last year was amazing. Hunter, you missed it last year, but
I'm not missing it this year.
Not missing it this year. It's going to be a great time. Obviously, concerts are going to be there. With Sonar is going to be there. What are the reasons you need to show up? Obviously, there's going to be tons of industry speakers. Keynotes. Brad Jacobs is going to be there as well. So it's going to be a good time. I'm very much so looking forward to it. A lot of new technology I think that we're going to see. The conversation is going to be a little bit different. I think folks are probably going to be a little more bearish than they were last year. Last year, everybody knew that we were kind of getting into the recession, but everybody was like, it's going to be short-lived. Nobody was really feeling it yet.
Soft landing.
Right. It was still a soft landing. And who knows whether the broader economy does that or not, but certainly the freight market doesn't feel like that.
Yeah, it does not feel like a soft landing, at least in freight.
No, it doesn't. But anyways, that's going to be a great event. Highly recommend if you need to make it, or if you can make it, do your absolute best. Plus, you get to spend time with us and see Chattanooga. Chattanooga's a good place. Oh, we're also doing one of the events in the aquarium. You know all about our aquarium, Hunter.
I am a season pass holder.
It's a great place.
It's a great place. It's a fun time.
It is a fun time. I think, and that'll be a great event. It'll be late at night. No jumping in the tanks with the sharks. But all in all, that'll be a really good time. It'll be one of the best. A great way to end the year too, because there's been a lot of good conferences that I've been to this year. But I think that'll be a fun one. Feels a little bit more like a party. So the question ultimately becomes: let's make a bet. Where do you think OTVI will be by then? Where do you think volumes are going to be up or down from where they are now? Put you on the spot.
It's so hard.
It is hard, but that's why
we're trending down. We've already trended down quite a bit.
Let's see. Can we pull up the volume chart again, please? There it is. So we're at 10,972 on the index, down about 3% over the last few weeks. So I guess the question is, where do you think we land? I'm going to go 10.5 by the event. That's a big drop.
That is a big drop.
Almost 5%.
I'm just going to be neutral. This is going to be a bland answer, and I apologize, but I'm going to go 10.9. I think we're going to oscillate. I think we're going up, and I think we're going down between then. but I think we're going to be about the same. That's what I'll say. I feel like that's
Yeah.
a safe bet after the pullback. If we were where we were at the end of or middle of September, I would go down.
Yeah.
I would bet lower, but I'm gonna go steady from where we're at now.
I'm going to go 10.5. The reason for that is I think that puts us back around Q1's peak, which was in March. So I think I could see us coming back down to that level. I don't think we're going down to the lowest level we were at, which is in Q1 where we hit about 10,000, which would be almost 10% down from now. Yeah. But yeah, I could see us hitting about 10.5. So we'll see if we hit it or not, but time will tell. I mean, for all the folks that are in the industry, I hope we don't, but I mean, the pessimist in me, that's what I'm feeling. So we'll see where it goes. We'll do it. We'll do another channel check when we get closer to the event and see if either one of us are right. Or who knows? Maybe it'll just shoot up and everything will just be great.
Yeah, maybe.
That could happen too.
Maybe.
Could happen. I don't know. So one other thing I want to pull up too is we want to pull up the NTI index. This is our National Truckload Index. This index too, interestingly enough. So if you remember the last index we were looking at, our contract rates were correlated with J.B. Hunt's revenue within 0.1%. But that was their revenue excluding fuel surcharges. Where's the NTI? There it is. So our NTI index was down almost 17.5% on the year. And according to Zacks.com, they do a lot of the research and they collect a lot of the analyst reports. Their year-over-year revenue declined by 17.6%, which included fuel surcharges. This index here includes fuel. It's all in. So this was down 17.4%. They were down 17.6% year-over-year, including fuel. So again, within 0.2, not even, of revenue there. Which this one kind of surprised me because this is really a lot of spot data. And I would have thought J.B. Hunt maybe wouldn't have had, I mean, they don't have that much exposure to spot, but it is surprising that their revenue is still correlated to the spot market this tightly.
Yeah, that is surprising. I know just from when I was in the brokerage world, when things were starting to get pretty rough on rates, I do know that shippers, though, they were pressuring down. I think even going direct to the shipper, I mean, they knew the market that they were in. They knew they finally had leverage to push rates down. Maybe that's a testament to that. Maybe they're pushing everyone down.
You think maybe trying to get back some of what they, I mean, because a lot of them blew budgets in 2020, 2021.
Oh, certainly. It was to the point where people were coming and just move this.
Yeah.
Like whatever the rate, if you have a truck, just get it moved.
What was the most ridiculous thing you heard during this time? It could be a rate. It could just be like a way somebody got something. Define it however you want.
I remember one time I paid $16,000 to get something moved from Washington to Georgia. It was a team, but still $16,000 reefer. Yeah. $16,000 reefer Washington to Georgia, and it was a 3-day run, 2-3-day run team.
With a team, they could definitely, they might be able to do it too. Yeah.
And the craziest thing was they were wanting more money, of course.
Oh my goodness!
It's like telling me I wasn't paying enough.
Hold on. What was the shipment? Like what was the trailer temp? Was it like ice cream or something? Had to be like negative 15?
No, it was relatively normal for reefer. It was 28, I think. It was just below freezing.
Okay.
So nothing out of the ordinary. Nothing.
You said Seattle to somewhere.
It was in Washington. It was not Seattle. Let's call it Seattle. Yeah.
And where are we going?
North
Atlanta?
Georgia.
Okay, so I'm just gonna call it Atlanta.
Yeah, do Atlanta.
And I'm pulling up reefer right now. Just see what it is today. I also have contract. I get that it's long. All right. So today's rate spot is 6,000, and today's contract rate is 6,600.
Okay, to give them some credit, which isn't a lot. It was a team. It was
so
a
let's
team.
add a little bit. How much premium do you add a team for? Like
right now, probably not much
in
at
a normal
all.
market, yeah, 10%.
Maybe
in a normal market,
a little bit more.
A little more.
Yeah.
Heck, even if we double it, you're still only at 12,000.
Maybe it was 15,000. Maybe, but I know it was
that's insane.
It was.
Okay, so that's big, but that was the market, right? That's what the market demanded.
And my customer completely agreed. They got it. So they understood.
Yeah. So in a situation like that, right? Because I worked in brokerage, but it wasn't that crazy at the time because I didn't work in this last market. I was there in 2018. That was pretty crazy, but not as crazy. And you would hear stuff. Sometimes you'd be like almost afraid to tell your customer.
Yeah, well, I think maybe if I would have been in the brokerage world when things were more normal, I would have felt that fear. But I came in kind of at the peak, kind of came in or right before the peak where things were starting to get crazy. So I kind of thought it was normal.
Yeah.
Like I didn't know really anything else. I mean, I knew we were in a crazy market, but this is conversations I was having to have not every day, but relatively regular. Of like,
So how do you
be a lot
price
more.
that? Do you just be like, okay, that's the rate, add like 15% or whatever your number is, and
It just depends on the customer. Yeah. It just depends. That's one thing. Like we like to think about pricing, at least when it goes to the customers. It's got a formula. They always talk in the brokers like you always want to make 15%, but it depends on the customers. Some customers you can make 15%, maybe even a little bit more, and they want it just to get there in a timely manner, and they care almost all about service. But then you have other customers that are much more nitpicky on the price, and it's like even with a huge run like that, like maybe 5%, maybe.
Yeah. Yeah, it also depends, right? Like how much work is involved too. Like I used to do like entertainment shipments, and we would make 30% on them, but you were also like up at 11 p.m. to 4 a.m. kind of getting trucks, coordinating, getting permits. There's a lot more work involved. I mean, you were going through the night.
Yeah.
But anyways, folks, that's all we have time for today. We will see you next week on With Sonar. Have a fantastic rest of your day.